Bienvenidos a su canal El Contra. Today is a little bit a different video because I would like to share with you the highlights, the really the first introduction about the taxation in USA and different corporations that we have. And this is something that probably you really need to understand when you are doing business in USA. So let's start with the presentation. Here we go. We are with the presentation. I call business structure. The first one that I would like to share with you is the corporation. The corporation, based on the USA law, they consider when we create a corporation, we create an artificial person. So it means the corporation has their own rights and their own duties and responsibilities. So there's nothing to share with the shareholders. So the shareholders create the corporation and the shareholders doesn't have any kind of impact of this kind of debts or liability that the corporation has. So there are two different kind of corporations. C corporation that I call the small and simple, and there's another one that we name C corporation, which is complex, which is biggest corporation like Apple, Google, Facebook. The corporation is controlled by the board of directors. They need to have one. Probably the board of directors, that's totally different of the shareholders. They need to have a formal creation. After that we are discussing about the formal and informal creation, but the corporation needs to have an article of incorporation. Who authorized that kind of articles? The states authorize and approves the article of incorporation. The main topic that the corporation has is every 2 years or 3 years, depends on the the rules of the state of the rules. They need to pay dividends, obviously, to the shareholders. If the corporation doesn't pay any kind of dividend, they create an accumulated earning tax that the IRS determine the rate, determine the treatment, determine all the process, so they need to pay. The second one, which is the most common, I would like to say, company that we have in USA, they call LLC, but their meaning is limited liability company. So they have the same characteristics about the corporation. However, if you see the formal creation, they need to have a certificate instead of the article of incorporation. They have limited liability when we have contracts or debt, but they have unlimited liability when somebody creates or is negligent, or they have a negligence action, or they have a fraud or something a little bit similar, because the negligence is a huge concept. So we need to understand the main difference to be negligent or non-negligent. The third one is the partnership. The partnership, that's an informal creation, we have an oral creation, or we have just an agreement. Probably you are talking to me and you would like to sell something, and I have the the logistic, or I have the delivery service. Probably it's oral, and we in automatic create a partnership. So this kind of partnership, that's a little bit common here in USA, because you only need to have the agree, or you need to be with someone else to say, hey, let's create a partnership. You create a name, and after that you have a partnership. The main thing that you need to understand is the partnership, they have unlimited liability. So any kind of agreement, any kind of things that you break, or you break an agreement and you didn't achieve the goals of the agreement, you need to pay all the things penalties, civil penalties, and sometimes you need to pay more than 100% of the fault or the agreement. The fourth one, that's the limited liability partnership. This is only the accounting firms, architects, they use that one. So any time that you would like to see the KPMG, or E&Y they call LLP because this is the only liability partnership for them. So they need to have, again, the formal creation. And the difference between the LLC and LLP, which is the partnership, that's the unlimited liability in contracts and debts, unlimited liability when somebody is negligent, because they say like, somebody was negligent, that's not part of my responsibility, and they need to charge the person as a person, not as a partnership. The tax. So the income tax rate at federal level is 21%. We have different states, like they create their own, income tax rate per state level. So they want extra 1%, 2%, 4%, depends on, there's different rules, different rates per state. Another one is the sales tax. Sales tax, that's determined by local, by county, by the state. So California, generally speaking, they have 7%, but however, Florida has 6%, but probably, the county, which is probably Miami, and they have, the local or the city, they create different sales tax. So the sales tax that we are paying in USA, it's a little bit complex because it's per city, per state. Even though you don't have any kind of warehouse in the state, you need to pay when you are doing business in that state. So it's a little bit complex, but you need to understand that we are paying federal income tax, we are paying sales tax in every time that we buy a new or brand new product or used product. Finally, we have franchise tax, which is something that we need to pay in annual basis. Is determined based on the capital, based on the assets, based on the all the capital, the banks, or even though the business is not based on the revenue, because this is a little bit different. But this is something that we need to pay just because we are doing business in the states. So every state that we are doing, like a California, Delaware, New York, they need to pay as a company. The company needs to pay the franchise tax. So that's the biggest difference sometimes that we have with different countries. But this is something that you really need to understand. Like you need to pay that one. The methodology behind of that one, probably you need to contact the CPA, or you need to contact the tax manager or someone who knows all these kind of things. So to me, this is it for this kind of video. I hope this kind of video helps you to understand a little bit how to read, the corporation in USA, and how to understand a little bit the tax or rate and the taxes that we need to pay when we are doing business in USA. This is it for me. And remember, share this kind of information. And this is your friend El Contra. Bye.